Shall we kick it off?
Yeah, let's do it.
Okay. Welcome back, everybody. It's episode 26 of the Canadian Private Lenders Podcast with your hosts, Ryan and Neil. Neil, how you doing, buddy?
I'm doing great. We're sitting here getting set up. We these guest episodes always put a little bit of pressure on me to get my office rejigged, and I didn't get it done in time this time. But fortunately, our guest is chill about it.
Yeah, you're our official IT guy now, Neil.
Yeah, I've somehow become that. I don't know what's going on here, but anyways, do you want to introduce our guest here? Today we're going to be talking with somebody out of Newfoundland,
Absolutely.
Mr. Rob Jennings.
Yeah, very special guest now. Very prominent mortgage broker in Newfoundland out of St. John's. We've got Rob Jennings of East Coast Mortgage Brokers. Rob, thanks for coming on.
Hey guys, how's it going?
Very well. Very well. It's great to see you again, Rob. It's been a little bit, and looking forward to catching up here and learning about what's going on with you and your market and a bit about your history in the space. So let's jump into it.
Let's do it.
Do you want to introduce yourself a little bit, or Neil, you had something to say here?
No, it's my first time meeting Rob, and Jesus, Ryan's been picking the guests, and every time it's a Leafs fan. I don't know where.
Oh, we want to jump right into that.
Oh yeah, 100%. Because we should have been talking about that. We were just talking off before the recording started.
So we've definitely lost
these guys.
We've definitely lost listeners already because I bring up the Leafs in every single episode now on a private lending podcast. But Rob, I'll throw you to kick it off. I'll throw you the same question we threw our last guest, Lawrence. So when the Leafs win the Stanley Cup this year, who's your MVP pick?
Well, I am not gonna go down that path with you. Actually, I'm a very humble Leafs fan that's been disappointed many times, and I'm gonna keep my expectations in check right now.
Wow!
And I'm not gonna be one of those.
Wow. For the record, I picked Austin Matthews. I think it's obvious. I know it's a super obvious cliche pick, but if they get it done, it's going to be him.
Yeah.
But all right.
I like Rob. I think he's a bit more realistic on what's going to happen.
Sounds like a Sens fan.
It's called the reverse. It's called the reverse jinx. Actually, you don't want.
Nothing works for the Leafs. You know that, buddy.
I try something different every year, so this is my approach for 2024.
Okay, I like it. All right, Rob. Let's kick it off. So. Let's go through kind of an introduction about yourself, a bit about your background, and kind of how you got into the broker space originally.
Yeah, so I've been brokering for 12 years with East Coast Mortgage Brokers, and I got my start like a lot of people in our industry in back with City Financial, now Fairstone. Right out of university, I started in subprime lending. The good old fashioned household financing, where we had to sell high interest rates to clients who, were in tougher financial positions. So it's all I ever knew. Right out of university, I was thrown into this world, and of course, when I discovered what mortgage brokering was, and that was in 2011 when interest rates went under 3% for the first time, right? So I'm just like, I'm going from 35% loans to 3% mortgages. I'm just like, this is easy. I could do this all day, and obviously, it helped transition into alternative and private lending. 3 of my first 4 deals back in September 2011 were actually B deals, right? And 2 of those 3 were actually City Financial clients. So I just dove right into alt lending. And obviously, as private lending started to emerge here, I think I had a head start.
Just to back up for a second, so did you join a team, or like if you're at Fairstone, then did you see someone else doing it, you talked to them and join on with them, or how did that go?
Yeah, so East Coast Mortgage Brokers, obviously, very proud team member here. We started off very small, and Claude, the founding East Coast Mortgage Broker, originally was recruiting me for RBC because he was actually a branch manager there. And of course, he got the idea of the mortgage brokerage. He said, Rob, I got a new idea. Let's try mortgage brokering. And it took me a little while to come over there because I didn't even know what mortgage brokering was at 28 years old. But so East Coast started off very small, back in 2010, 2011. And when I came over there, we just started to grow, and we had a really good run. Obviously we started to get a lot of national recognition, and we even, peaked in 2021, winning the top brokerage in Canada at the Canadian Mortgage Awards with employees 25 and less. So that's a little bit, like I said, humble beginnings, but obviously now a pretty recognizable brand, and we get to do fun things like podcasts with you guys now.
Absolutely. No, that's super cool. Thanks for giving us that background. And I know more recently you've kind of started your own team as well within the East Coast Mortgage Broker team. So do you want to talk a little bit about Jennings and Co. as well?
Yeah. So, obviously, there's just growth. What happens is the East Coast grew to what it was, and the individuals on the East Coast, grew within that, and we've all kind of, hired our first assistant and then our next associate. So we've all got these, teams, or we call them sub agencies under the East Coast umbrella. So it's just a result of, like I said, continuous growth, year over year growth. And I'm very fortunate to have, a team of 6 of us now that are able to, deliver under Jennings and Associates while still being aligned and under the East Coast Mortgage Brokers umbrella. So, like I said, it's been a very wild ride, in our market, in the national market, with interest rates and all of that. But we've been able to grow every year and still, very motivated to continue to grow.
I'm gonna apologize real quick. I had to get up there. I knock on my office door. I got to get a red light on the outside of the door. It says recording.
Yeah,
don't make any noise.
Exactly.
But so how big is ECMB now?
ECMB, wow. We started to keep track. We graduated to the above 25 category at at the Canadian Mortgage Awards. So we're hovering around 30, agents and assistants right now. And like I said, we're over here in St. John's. It's a small market compared to the rest of Atlantic Canada and the rest of the country, but we definitely got a good thing going on.
Are you guys? So then, is everyone in St. John's, or are you guys kind of spread out throughout the province? Like, how does that work? And it's like people servicing specific.
We actually have a branch formerly in Nova Scotia, and we do have people in other parts of the province as well, but primarily here in St. John's and CBS.
Nice.
You've met Sam Horseman before. He was at our welcome.
I have.
He's part of the expansion, the future global expansion of ECMB. I think he was the first guy outside of Newfoundland, if I'm not mistaken.
Yeah.
Which is cool. So Rob, we're curious to learn more about the Newfoundland market and what makes it unique, because sometimes little old Atlantic Canada, we kind of get all lumped together when compared to the Quebecs and Ontarios and out west of Canada. So, but Newfoundland is certainly unique in Atlantic Canada on its own. So why don't you talk a little bit about that and what makes it unique and how it affects you as a broker from a lender perspective?
Yeah, something. I'm a pretty proud Newfoundlander, actually, and we do get the short end of the stick sometimes. I'm actually very envious of the Halifaxes, the Monktons, and all the growth that you guys have had, even pre-COVID. Buying a house in Halifax, the price is greater than 50% more expensive than a house in St. John's right now. And we're pretty similar cities. I can't say that Halifax is too much better than St. John's. Like I said, I'm a little biased. I'm a little biased.
Here we go.
And but look at your market compared to ours. Look at your market. Look at your condo market. We barely have condos here. We're very unique. We're definitely a resilient market, right? Our values are 50% of what the average purchase price in Canada. Our urban markets are considered very small, and most lenders won't lend outside of St. John's Metro. So we have very strict lending restrictions, and some lenders don't even lend in Newfoundland, right? So we definitely are at a disadvantage as a mortgage broker, as a real estate market, as an economy, right? We do have higher unemployment levels, although we do have equally low delinquency rates, right? We obviously are oil dependent and natural resource dependent, so there is volatility there, right? And so, when we're over here and we're looking at, the rest of the Atlantic provinces thriving, we're kind of just chugging along, you know, and but once again, resilient because we've had a lot of up and downs, and so has our country, and we've kind of plowed through, right? I saw, a table last night, the night before on Twitter, and it just showed everyone's, year over year decreases so far after one quarter into 2024, and Newfoundland is one of three provinces that were up. I think it was Saskatchewan and Alberta were the other two, right? Very similar natural resource dependent provinces, but once again, we never got the 10, 20% back to back to back years that everybody else got, right? We chugged along at low single digits. And like I said, we have a lower broker to bank market share as well, right? So it is a bit of a battle over here, but like I said, in my opinion, it's also opportunistic. Everything is growing, everything is stable. There is more opportunity to get a bigger piece of the pie, right? We have a lot of investors looking further east now because Halifax and Moncton have already grown, and now their pricing is, maybe not as much of a value anymore, right? So I'm having conversations weekly with people looking to invest out east, with Newfoundlanders looking to move home, and that's becoming more and more, like I said, frequent. So yes, a bit of a disadvantage, but I also believe it's opportunistic.
So, Rob, more like looking at it on the numbers side of things, would you say there's either less banks that are willing to lend? Is it simply area, like you mentioned, like they won't lend outside the municipality? Is there issues with loan to value? And then do you feel that it really impacts the home values? Like if there was more opportunity to get higher leverage or better rates, like depending on which items it is, do you think that would also help to grow the marketplace? I'm agreeing with you because I feel this way in Atlantic in general, that we get lower loan to values and they won't stand behind anything, which ultimately, if they're not willing to lend against these places and they also don't give the best, most preferable rates, it's going to impact our home values. So I can agree with what you're saying, but what are you seeing? Is it a combination of all of those things, or is there one thing in particular, like locations they just won't touch?
Neil, I think it's all of the above, actually.
Yeah.
Okay. Our big thing is, when you have a lender, whether it's a private lender, in an institution or, just a small bank or whatever that is up on the mainland, when they look at the province of Newfoundland and see how big the province is and how spread out our province is from Newfoundland right to the tip of Labrador, I mean, our population is about the size of Hamilton, Ontario, and that covers a lot of ground. And we've got one major metro area, and it's St. John's. And I would say even St. John's, when you guys get here, there's no towers, there's no cranes in the air, right? We're pretty spread out, and everyone's got a lot of space, and everyone's got a backyard, and people prefer to live outside the city, and as we go out, further outside of St. John's, like I said, it gets more rural, and I think just from an executive decision making process, they look at this and say, it's not worth our time. It's not worth our investment. Why would we spend so much time on this little province in the North Atlantic when we got plenty of business here in Ontario, or we got plenty of business in Montreal and Ottawa and Vancouver? And yes, they're going to Halifax and Moncton because they're the hotspots, or the popular places to go, right? But why would you spend any more time, trying to get an extra couple of deals out of Newfoundland, right? So a lot of people just don't even give us a shot, and when they do, they're going to temper their expectations, right? Like I said, they're going to want to get their feet wet, and but I think when lenders do come over here, and they see the market is stable and delinquency rates are low, and they get a good feel for it, they wish they were here sooner.
Yeah, I think that's a great point, Rob. And I think we see that across Atlantic Canada, just due to the volume that comes out of Atlantic versus other major markets in Canada, like you comparing, the population to the size of Hamilton. And I think that's further exasperated for Newfoundland, just given its geographic position and population size, right? So just wanted to go a little bit deeper on the Newfoundland market, because I think people will be interested in that. And I know you touched on, natural resources and oil and gas is kind of driving the economy there. But what other factors? I know there's like been some, big tech companies out of Newfoundland as well. So can you kind of speak to the what's driving the economy in Newfoundland, and also what you feel the outlook is for Newfoundland, kind of short and long term?
Yeah, that's a good question, and I think when everyone looks at Newfoundland, they first think fishing and tourism, and I'm still going to say that's really important, to our backbone. But we need oil. We have access and ownership to some of the best offshore and deep sea oil reserves in the world. Okay, and this is good, clean, accessible oil. And like I said, I think most people would agree that oil is a necessary evil and isn't going anywhere for quite some time. We're seeing recent oil prices, even the past few weeks, set to increase to recent highs. So we're really big on oil. Obviously, other natural resources. We live on a rock, right? We live on the rock,
The rock.
and we got some recent gold discoveries and nickel and iron ore up in Labrador. So, we are very much, dependent on natural resources, oil and minerals. But yeah, like I said, there's a lot of pretty cool things happening. Like I said, some tech success, and everyone's heard of Verafin, being bought by NASDAQ. But there's a few other up and coming tech companies that I think will help put Newfoundland or keep Newfoundland on the tech map. Avalon Holographics is doing a lot of special things here, and like I said, I think that the real estate industry itself is very opportunistic. We don't have much in the way of multi-res, much in the way of condos or apartment buildings. This was land of the 2 unit, and it still is for the most part. But I do believe that affordable housing is important, and you can get so much bang for your buck here. You know what I mean? The average home in St. John's Metro is 330 out of 1,000, right? That gets you like half a condo in GTA. You know what I mean? Here it gets you a 3-bedroom with potentially a garage or shed, back deck, on a 50 by 100 lot, finished basement, 2-car parking, in a decent, friendly neighborhood. That's a lot of house for less than 350 grand. So I think that immigration is obviously very important to Newfoundland, and that's obviously been in the news quite a bit across the country. And we every Canadian complains, but I think when Newfoundlanders can look in the mirror and say, look how cheaper it is to live here, and we didn't have those dramatic, desperate real estate markets that a lot of other areas have had during COVID, and even now with low inventory levels. We do have low inventory levels, which of course keeps things chugging along. Sales are down, In 23, they were down almost 20% year over year. And in 24, year to date, they're even a little bit down from 23. But like I said, it's healthy, it's stable, it's not dramatic. And I believe there's still a lot of opportunity in real estate investing. We have the highest rent to price ratio in the country, right? That's why people are looking further and further east, right? So when you talk about, hey, we've got emerging industries and like I said, global opportunity in oil. And then you look at real estate, being opportunistic. So I'm a little biased. But everything I said,
I'm thinking about it, like maybe I should start going there. What have you seen have you seen a migration or an immigration of people based on the housing affordability? Because I was talking to someone last night who came here from out west, and housing affordability was top of mind for them. And it's like it's not really that affordable. It's like by the time I boil through everything, and he was considering the additional cost of living, like taxes, food cost, and those items. And he's like, and he was in Vancouver before, and he's like, I don't really feel at this point. But again, he's in Halifax downtown. He's like, I don't really feel like I'm getting ahead here. But are you seeing that? Like, were you mentioning that highest rent to price ratio, substantially more affordable homes probably than almost anywhere in Canada? Are people showing up for that have like remote jobs or the ability to be there?
So I'll tell you now, when COVID hit, obviously, we were seeing that, right? We were seeing the COVID wave where people were in GTA and GVA, and it spread to Montreal and Ottawa. And then it spread to, Halifax and Moncton, and then Calgary caught on fire. And as it was coming east, I think we were just starting to see it. I was starting to talk to a lot of Newfoundlanders that were actually trying to move home, try to work remotely. People with very small Newfoundland connections actually deciding to semi-retire or work remotely and start to come home, and investors obviously start to look further and further east past Halifax and Moncton. But then rates started to increase, right? And what I think happened when rates started to increase is those investors kind of got on the sidelines, like, okay, maybe we don't know. Even though things continued to go well in Newfoundland, where they were too in Ontario, the sky was falling. So they were kind of keeping their cash on the sidelines. And once again, as things have kind of settled down, we'll say, post-COVID, you look at the Halifaxes and Monktons and how far they've increased. I could see it again this spring, and even, earlier, more and more people starting to kind of pick up where we left off before rate increases and start to look further in Newfoundland right now.
If someone's looking, like, so what do you think is contributing? So you're saying the rates, you think, are the biggest contributing factor right now to the reduction in volume?
Yeah.
Is there anything like economic swings, like, because oil and gas you're saying is up, right? Is production up, or are facilities getting shut down? Because even though prices have been up, Canada tends to be a difficult place for a producer to operate. Like, what's going on there?
Yeah. So, I mean, we've been kind of holding our breath on a couple of specific oil and gas developments here off of the coast of Newfoundland. And of course, particularly Bay du Nord, which of course was getting worldwide attention for its potential. But of course, great amounts of government regulation and basically, making the deal unfeasible. Okay.
Squeezing the lights out of all these projects.
Yeah. And, fortunately, I think, I from what I've been hearing, that there is a lot of restructuring, and obviously with the increase in the price of oil and gas, these numbers are starting to make sense again. Okay. And like I said, there may or may not be a new government in place by next year that may be more supportive of this. And but we're going to need oil and gas for the rest of our lifetimes, and the big thing is, of course, they want that to be efficient, but also green, and it is the cleanest, one of the most safest ways to extract oil. So I believe we did hit a number of roadblocks, because of current government, because of geopolitical, tension in the oil and gas industry, OPEC, and COVID and everything. Just, you can use COVID as an excuse for anything, right? But I do believe, like I said, that the dust will settle, and we will. The current oil projects seem to have been getting longer life extensions, one after another, and the new projects, although kind of they were temporarily shut down or pushed out a little bit, I believe are getting a little bit closer to making a lot more sense. So once again, I'm pretty confident in that.
Cool.
Do you go ahead, sir?
Oh, no, you finish your thought there.
I was gonna say, have you experienced any times when, like, oil has been way down in the gutter, and could you see your impact directly on the housing market, or are most of the people that own there fairly stable, and then it's more of an impact on maybe the rental market for workers that maybe from surrounding provinces or just there for those specific developments you were talking about?
Yeah, remember the price of oil fell through the floor December 2014, right?
Yeah,
Our country actually went through a bit of a oil recession. You guys may not have felt it. GTA probably didn't feel it, but Alberta and Newfoundland certainly were very dependent. We had a very sluggish 15, 16, 17. Remember, that's why interest rates were so low back in 15 and 16, low twos, right? And like I said, it was because of oil, but we felt it more than most. And of course, then the national economy continued to grow into 17, 18, 19. And of course, then COVID hit, right? So we did have that low where if you bought a house in 15, by 2020, that house probably wasn't worth much more. You know what I mean? Maybe even in some cases a little bit less. So COVID, although things started to go crazy for most of the country during COVID, it took us until 21 or 22 just to get back to those 2015 peaks.
Wow.
Right.
Mhm.
So you're absolutely right. We did feel it, but we had a good run. Real estate in Newfoundland and St. John's doubled from 2004 to 2014. And this included when most of the country was going through the global financial crisis. We actually were having some of our best years with back-to-back double-digit growth. Once again, Newfoundlanders were very resilient. We often zig when others zag. We're always a couple of years behind trends. So it's a very unique market. And for a lot of people, that's enough reason to avoid it. That's enough reason to say, hey, those guys are crazy over there. They're doing their own thing. They're really independent. They're really unique. But in my opinion, that just makes it more opportunistic.
Not the activities on George Street that are keeping people away.
Well, I haven't met anybody who didn't like George Street, right? So, I mean, but
That's bringing more people in.
Sometimes it takes, you got to get there to find out, right? So, but another thing, Ryan, in that oil low, a lot of really good restaurants closed or couldn't stay open because when the oil money is not there, the oil executives aren't having, those dinners on the weeknights and things like that to keep things, consistent. And when oil went down, a lot of that didn't come back because people, the oil companies learned, hey, we can't, we have to save for a rainy day. We have to be a little bit more mindful because oil, and of course, rightfully so, because oil's been very volatile since.
Say, Neil, George Street rarely disappoints. And if you haven't been to St. John's, it's a bucket lister. Fantastic place to visit, at least I'll say.
I gotta do it.
Let's pivot back to private lending. So Rob, I know you've got a ton of experience in alternative lending. You touched on the fact that your early deals and your past experience with Citi as well was very alternative focused. So with your experience in that space, how do you use it as a tool to help out your clients?
Well, like I said, it's exactly that. It is. It's a tool in the tool belt, right? And a lot of people, private lending is a very useful tool, right? It's a cost of doing business, and it's a great short-term solution. You know what I mean? We have a lot of people that want mortgages that can't get them. We have a lot of properties that just aren't mortgageable. I deal with a lot of people in the construction space, in new home construction and flips and stuff like that. They realize the value of private financing, and they realize, builders need to build to make money. If they're not building, they're not making money, and they need money to build, right? And even at higher interest rates, the more they build, the more money they make, right? If they build 5 houses in a year, it's better than building 3 houses in a year. Even if those extra 2 houses were more expensive from a financing perspective, they're still, margins might be thinner, but they're still making more profit per house, right? And like I said, we've been in an area where banks are conservative by nature, right? Private banks, commercial banks, for example, have been very conservative during COVID, post-COVID. Construction mortgages don't cash flow. Commercial banks want their properties to cash flow. So you got to be a very strong applicant to get money from a commercial bank. And even the strong ones usually are busy enough that they need more money than what the banks will give them, right? And so, private lending's become a daily conversation with people that either A, have found themselves in a really bad financial spot for one reason or another, or B, people who have found themselves in a really good spot. Rob, I got an opportunity. I just can't afford to do it. Rob, I got a great, business idea. I just need some funding, and so you definitely have to take private lending and put a more positive twist on it, and break it down, break it down. What does double-digit interest rates cost per month, per day, not per year? Most projects don't last a year. So why are you worried about an annual interest rate? Break it down. I always say, you don't do a mortgage for the sake of doing a mortgage. You do a mortgage when the benefits outweigh the costs. You don't remortgage if it increases your interest rate too much that it doesn't make sense anymore. You don't remortgage and pay an appraisal and cover legal, you know, you don't try to save $3,000 when it costs you $6,000, right? And this is even with competitive or conventional mortgage. You do a mortgage when the benefits outweigh the cost, when the pros outweigh the cons, right? And like I said, when it comes to private lending, where there's equity, there's opportunity, you know? So anyone who has equity in their home, anyone who has, you know, a sizable down payment, there's an opportunity to get a mortgage if that mortgage makes sense. So some people aren't even offering private mortgages because they've already made the decision for the client. Nah, they're not going to take that. That's stupid. This guy's rich. This guy's a professional. This guy's an engineer, right? And maybe some people just don't understand the value of that money to somebody versus the cost of borrowing, you know? So, you know, for me, it's just instilled in me from, once again, an early age. But I've just seen too many people become very successful from using private financing to fund what they wanted to do. That if you're not offering it to your clients, you're doing them a disservice. You know?
Man, I love this, Rob. You're reselling me on private mortgages right now. We got to rename the space to opportunity mortgages. I like it's either, like you said, you're in a really bad situation, or it's a really great situation. And I think that's, again, who we focus on.
Yeah.
So yeah, I was sold there. I like that.
Yeah, that was incredibly well said, Rob. I think we found our new BDM for Newfoundland.
Yeah.
But,
I'm not cheap, I promise.
and you can guarantee that's our real cut there for the episode.
Oh,
What
100%.
Rob just said, that was fantastic.
So you crushed that.
That was actually a perfect segue into my next question too, Rob. So, you know, one of our biggest challenges as a private lender is to get brokers over that stigma of like not wanting to consider private loans for a variety of reasons. Like you said, you might have an engineer, got a good income. Why would they even consider it? I'm not even going to present this option to them, right? So from your experience, how do you position to, thinking of your team specifically, how do you position for them to identify a potential private deal? And how do you kind of get brokers who are not comfortable with it? You know, maybe they do only a business. They only want to do clean business. And if they see something alternative or private, they just hand it off. How do you get people over that stigma to get them to consider this business?
Well, you know something, I know it's cliche, and I just recently said it, but once again, I say this like multiple times a week to my team, where there's equity, there's opportunity, right? And like I said, you know, not everybody has the luxury to access equity. Not everybody has built up that net worth, but to those people who have, you know, you got to be able to offer it as a tool, you know? I remember being at one of the, you know, MPC national mortgage conferences, sitting in on a speaker, and you know, he was a you know, a really good, successful broker, and you know, I always love picking up these tidbits at the conferences. And his pitch was, every single person he meets, he offers an approval to, whether that is a Scotiabank approval, a First Nat approval, even like an Alt A approval, a B approval, a private approval, even a rent to own. No one leaves without something. Hey, here's what you can get, and that could be 35% down, 15%. But that person left his office with an approval. It might be unrealistic, it might be stupid, but that was his pitch, right? Because every single person can get a mortgage, but like I said previously, in a lot of cases, that mortgage might not make sense, right? But our job is information providers, option providers, you know, people who look at it objectively, and work for our clients. We're on their team to provide them the options so that they make the best decision for themselves, you know? And like I said, you know, we're not using private mortgages for first-time home buyers. You know, we're not using private mortgages for long-term solutions, with some exceptions. But like I said, there's a lot of reason now, more than ever. And I think the longer you actually mortgage broker, the more you see as well. You know, your book grows, your database grows, your reputation grows. And, you know, more and more people will rely more heavily on you to come up with creative solutions for their problems, you know? So it is tougher for someone who is less experienced or has only been doing a business. But I remember I had a couple of newer agents, and they had completed their first tough private mortgage, and I said, there you go, you got one under your belt. They're very complicated, very tough, but ultimately, private mortgages can be the easiest mortgages you ever do. It's hard equity lending. It's hard equity lending. You're barely, there's barely income qualification. Credit scores are a distant second, So as unique or as difficult or as weird or as many twists and turns as it took, it may actually be the easiest mortgage you ever did. Try doing some of these A mortgages with Scotiabank or TD or some of the other, lenders. They ask for, everything under the sun, soon going to be, a blood test and a piss test just to get an A mortgage right now,
I think they've started doing that already.
Yeah. So a private mortgage, first you have to, eliminate your own barriers and say, hey, this is an option. You have to have confidence, right? Sure. Confidence in yourself, but also confidence in your private lender partners, And, but like I said, when you actually do a couple, you have to look back at it and say, geez, that was actually easier. Right. But it was mostly in here, So it is definitely fun helping some of my teammates go through some of the first couple, not to pick on anybody, but Renee was at Scotiabank for 20 years, and, but she's got a bunch of private mortgages under her belt now, And, she just submitted one yesterday, literally, the one I was telling you about earlier, Brian, before we went on. And so it's definitely a stigma. One of you guys said the word stigma, but I mean, it's experience-based. It really is. And you can't, I know there's private mortgage courses and things like that, but I'm not a big, I'm experience over education. I won't say much bad about education. But it's definitely experience-based. And like I said, every deal, can be very different. But at the end of the day, every deal is very much the same.
What percentage of your business do you think you're doing private now?
I actually know that number pretty well. Putting my 23 numbers together for an award nomination.
Prep for this call.
Yeah,
no, I don't know the exact number, but I did up. I think it was like 16, 18 million between alt and private last year out of 130. So nice. It's a lot of mortgages, but it's still only like, 10, 15%, right? Which I think would probably be consistent to the market share of private mortgages across the country. I know some people were saying 20% because it's so unregulated and hard to measure, but I have a hard time thinking it's actually that much. But 10 to 15% would probably be on the high end for any broker, particularly a top producing broker. That's a lot of deals because they're smaller, right? Some of these private mortgages are $50,000 seconds, right, or $150,000 firsts, or 50% LTV deals. It takes a lot of those to add up. You know what I mean?
Yeah, and that's the most recent numbers. We sent out a newsletter today that showed 1 in 10 deals is private now. That's across Canada. I personally feel, I don't have the numbers, but I personally feel Atlantic is under indexed to that number. So it's probably less than 10 in Atlantic. That's not to say it shouldn't be 10 or more than 10, but there's opportunities out there that aren't being fulfilled still to this point.
Yeah, and I'd be slightly higher just because, like I said, I enjoy the space and that type of deal, type of client's been gravitating towards me, and I've been embracing it.
Yeah. No, I was going to say, Rob, if there was one thing, I think you've kind of already alluded to it a few times as we're wrapping up here, that you would want people to know about the Newfoundland market, what would that be? I mean, I guess just as a whole, where we're at with the mortgage market, and then also maybe as a whole the economy.
Well, I'm going to pick on the mainland a little bit. You got all these investors, they're buying rental properties. And I read a little tweet last night, and it was between a realtor negotiating a residential lease for their client. And the list agent said, hey, we're already $200 underwater here. And the purchasers or the tenants agent said, but you just bought this house. Why are you $200 underwater? Like, this is a brand new purchase. And the listing agent said, because every house is underwater right now. I'm laughing. I'm just like, are you kidding me? You're going to buy a potentially depreciating asset that has a negative cash flow and call yourself an investor. Every single two unit in St. John's and Newfoundland is cash flow positive. Every single one. Right?
Fundamentals still make sense.
You got a lot of first-time home buyers buying a house with a basement apartment, and the apartment is paying more than half the mortgage. Right? Great way to transition into home ownership. Once again, best rent to price ratio in the country. A lot of 2-unit homes, a lot of good real estate, and is very affordable. Like I said, I would rather own 2-unit homes at $400 a piece in St. John's than one condo for $800,000 in GTA that's negative cash flow positive. I'm getting between $500 to $1,000 cash flow positivity on each 2-unit. Plus, you're spreading your vacancy out among 4 units, 2 units, right? Not all your eggs in one basket and one condo. And like I said, where are people going to want to live when they can no longer afford to live in these big cities, right? And when people come here, they love it. They're on the water, the people are very friendly. Food is good. The weather's not great, but it's not great anywhere. Okay, so don't kid yourself. All right. You can. I live in the woods in Torbay. I'm 8 minutes from my office, center, East End, St. John's. You don't have to live in your car or on the subway. Most people have vehicles here because, like I said, it's not a luxury here. It's the norm, and most people can't even afford a parking space in a condo in GTA,
Not GTA right now.
I'm sorry, but it's
You're right.
true.
Yeah,
I'm a
the
Leaf fan,
lifestyle.
but man, I can't afford to live there myself, I think the more you know about St. John's, the more comfortable you'll be. Is that some people don't take the time. We're just an island in the North Atlantic. We've never been there before. But you always hear, Rob, my cousin was there. We had our honeymoon there. Or my daughter went to school there. Or my neighbor's from there. My neighbor is a great guy.
Yeah.
Name one person who says something bad about Newfoundland, And when you line it up,
Feels like a challenge.
Yeah.
right? Exactly. I challenge anybody listening to this podcast. All right, come at me. So you just, once again, it's not the perfect place, but I would argue that there aren't any perfect places,
Yeah.
and there's room for growth, there's room for opportunity, and like I said, it's a great place to live. And I believe that more and more people are going to look east, so you don't want to be too late.
Yeah.
Very well said, Rob.
I'm with you.
Just before we wrap here, I want to quickly touch on some of Rob's accomplishments here, because he is a fantastic mortgage broker, and on top of being one of the top volume producers, if not the top volume producer for years on end here in St. John's, Rob's also been nominated for the Mortgage Awards of Excellence this year as the Alternative Broker of the Year, also Broker of the Year for Atlantic Region. And on top of that, Rob is, I'm not sure if you knew this, Neil, but Rob's our director for MPC for Atlantic Canada.
Wow. No,
so represents all brokers and lenders out of Atlantic Canada. And you've been doing that a couple of years, Rob. So is there anything else you'd like to brag about before we wrap up?
I won't spend too much time there, but I can honestly say, and I said this to someone this morning, I actually had a call with a couple of referral sources this morning. I really love my job. Not too many people can say that. I genuinely love helping people with one of the most important financial decisions they have to make, whether it's their first home, dream home, cottage, rental, with renewal, refinance, whether they have lots of money or whether they're $100,000 in credit card debt, whether they're on the brink of bankruptcy or they want to buy 10 properties. This is really fun to me. I love the number side of it. I love the real estate side of it. I talk the talk, I walk the walk. And like I said, I love stuff like this. I love being able to talk, inform, and educate people. And I love, more than anything, talking to people on the mainland, whether it's a Newfoundlander moving home or someone moving here for the first time. It's my favorite conversation. It's great for the economy. Everybody come here, So you'll never find a more passionate, mortgage guy than me. And like I said, it's been really good to me and my family, obviously. And, I genuinely believe I was, put on this earth to broker mortgages, and harder the better. I find this stuff fun.
Oh yeah.
It's awesome. Unreal. Well, that's great. Anything else you want to add, Rob?
Go Leafs go, but tempered expectations.
Okay.
And
We're going to cut there here. That's enough of that.
We'll bring you on for another episode here soon.
and Neil, like I said, Neil, it's my first time meeting Neil. I've known Ryan for a while. Neil, no excuses. Not coming to Newfoundland right now. There's no excuses from no sympathy from me.
You'll see me this summer for sure. You got to show me George Street.
Yeah.
Yes, I can be a fantastic host, can't I, Ryan?
Perfect.
That's awesome. Well, let's wrap up there. Thanks everybody for listening. Hope you enjoyed that episode. Please follow along and give us a 5-star review. And thanks for listening. Cheers.
See you guys. It was a pleasure.